What's up everyone, this is Tony with Journey Crypto. In this video we'll be talking about dollar cost averaging and why this is my favorite investment strategy, and most people are very successful with this long term. So we're going to relate this to cryptocurrencies. I'll show you guys some examples and some charts as well. So before we get started, I do appreciate if you guys like the video, subscribe to the channel if you haven't already, and hit the bell to be notified when I release new crypto videos. As you guys know, YouTube gatekeeps cryptocurrency information and videos, so definitely you need to hit the bell if you do want to be notified. So in this video, we're going to get into what dollar cost averaging is, why it's very important, and why I use this investing strategy. Before we get started, I do want to remind you guys, my cryptocurrency giveaway is coming to an end. There's 4 days left here. I will be adding new entries every night at the bottom here that you guys can enter in and get extra entries just for a better chance to win. So there's going to be 13 total prizes for this one, some pretty good prizes. And I'll be launching the 100,000 subscriber giveaway soon after this one. So if you guys want to participate in this, just go to my Linktree link in the video description, and the top link here takes you to the contest page. Very easy to do these entries and enter, only a couple minutes of your time, and you can find other useful links here as well. Also, I do want to let you guys know that on my YouTube page, I just added a playlist here for cryptocurrency guides, and this video will be one of those videos in that guide. So I just published that. If you guys want to get more information, you're new to cryptocurrency and you want to get as much education as possible, definitely go through that playlist. You'll find some other useful playlists on here as well. All right guys, so jumping into what dollar cost averaging is, also known as DCA as you'll see it. So dollar cost averaging is an investment strategy in which an investor divides up the total amount to be invested across periodic purchases of a target asset in an effort to reduce the impact of volatility on the overall purchase. And I do mention this quite often. I do my dollar cost averaging slightly different than the definition of dollar cost averaging though, and I think my strategy actually works out better, especially in cryptocurrencies, and we will get into that in some examples as well. So in effect, this strategy removes much of the detailed work of attempting to time the market in order to make purchases of equities at the best prices. Dollar cost averaging is also known as the constant dollar plan. So understanding dollar cost averaging here, dollar cost averaging is a tool an investor can use to build savings and wealth over a long period of time. It is also a way for an investor to neutralize short-term volatility in the broader equity market. A perfect example of dollar cost averaging is its use in a 401k plan in which regular purchases are made regardless of the price of any given equity within the account. So many employers offer that you can contribute to your 401k plan out of your check on a regular basis. Basically, they're doing dollar cost averaging for you. But as an investment long term, I really don't think this will yield good return on investment, which is why I invest in cryptocurrencies, because that's where the focus is. That is what has the major potential over the next short 5 to 10 years period of time. So another major thing to highlight here is dollar cost averaging aims to avoid making the mistake of making one lump sum investment that is poorly timed with regard to asset pricing. So for instance, everyone that just invested in Bitcoin and Ethereum at the peak price, I'm seeing a lot of people complain about this lately. Basically, they bought Bitcoin at 41,000 and now they're watching it crash below 30,000 yesterday. And Ethereum hit all-time highs over 1,400, then went down to 1,050 yesterday, which is why I say the short term is very unpredictable, especially in volatile markets like cryptocurrencies. You're always going to get bad news and major dips, especially with the governments around the world fighting cryptocurrencies right now. There's always going to be FUD, which is fear, uncertainty, and doubt. And especially people that are new to cryptos, when they see a 15% dip, they think it's going down to nothing. They panic sell, which another suggestion here is to avoid emotional investing. So investors seem to have a knack for piling into investments at market tops and selling at the bottoms because it is not uncommon to get entangled in media hype or fear. So this is just how the majority of retail investors will invest. They're basically going to buy when everyone else is buying, which is going to be a peak price, and then they're going to sell during the panic while everyone else is panicked and selling. So they're going to buy the tops and sell the bottoms, and that's the exact opposite of how you want to be trading in cryptocurrency. Especially you will get shaken out if you're not careful. This is why dollar cost averaging is good, because you're spreading out your purchases. If you're doing this and you're buying the dips regularly instead of buying at the peaks when everyone is talking about it and FOMOing in, buying Bitcoin at 40,000 for instance. So Bitcoin at 40,000 in the future may actually be a good entry, but when Bitcoin hits 40,000 for the first time ever, and then it's followed by bad news, of course, it's going to drop a lot right now. So we have to keep in mind, Bitcoin just hit 20,000 not too long ago and quickly doubled to 40,000 in a very short period of time. So anything that does that is going to be very volatile, and you have to be very careful with this. This is why I do not go all in at a peak, no matter how good it sounds, no matter how high people are saying it's going to go. And I also invest for the long term in most cryptocurrencies I hold. I do day trade with a very small percent of my portfolio, which I will talk more about later as well. All right, guys, so to give you a good example of how you would dollar cost average into cryptocurrencies, let's say you get paid $5,000 per month and you get paid bi-weekly and you want to invest 20% of what you make into cryptocurrencies. So every 2 weeks, since you get paid bi-weekly, you would take $500 from your paycheck and immediately buy cryptocurrencies you believe in long term, that you're okay with holding long term and continuing to buy over and over again. And over time, this does add up very quickly, especially if you're timing this correctly and buying the dips. Basically, dollar cost averaging has you just buying on the day, no matter what the price is. But I do a slightly different version of this, where I actually try to time it to where I can buy the dip every couple weeks instead. So instead of taking my money out of my check and immediately buying cryptocurrencies, I would have that money ready to go in my bank account, ready to purchase cryptocurrencies anytime a dip came. And like we saw yesterday with that 15 to 20% market dip we had, I would have purchased with all the money I had waiting. So I do slightly different, but it ends up working out better, especially in a volatile market where you want to be buying the dips and holding long term and waiting for Bitcoin and Ethereum and everything to really get much more valuable in the long term. So it's also good to switch up your mentality when it comes to investing. Like Warren Buffett said, be fearful when others are greedy, and just the opposite, be greedy when others are fearful. So what we saw yesterday was everyone being fearful with all the bad news. There was bad news about Bitcoin double spending, which ended up being false. There was bad news about the tax laws that are being considered, but the stock market didn't even flinch from this, and cryptocurrencies dropped about 20% and now recovering very quickly. So it is possible we dip more just because the space is so volatile and more bad news could be coming. Lots of governments are fighting cryptocurrencies right now with it being so relevant and such huge profits. Everyone is jumping in basically. So switching up your mentality and knowing how to invest for the best profit potential is very important as well. So by using this mentality, you're going to be buying the dips and selling the tops rather than the opposite, where you're buying the tops and selling the bottoms. All right, guys, so I'm going to go over a quick example in this article and then show you my own example, how I would do a spreadsheet. So this is showing purchases in the S&P 500 index fund and how many shares you can get. So on payday one, you would be buying S&P 500 at $10 per share. You're only putting $50 in at a time per paycheck, which this is a small amount. If you really want to get ahead in cryptocurrencies, you're going to have to be doing a higher percentage, obviously, but still this adds up over time, especially if you're trading good and flipping cryptocurrencies. So at this $50, they'd only be buying 5 shares. And then at the total here, you'd have the total value of all your shares after the purchase. So payday 2 weeks later, the S&P 500 has gone up 5%. Each share is now worth $10.50, and you're still putting in the same $50, and you're going to get only 4.76 shares at this point. Shares owned, now you have 9.76. So obviously if you put that extra $50 the week before that in your first paycheck, you would have actually got a slightly larger amount of shares. So this is why this doesn't work out well for investment opportunities that just gradually rise. Doing this in the cryptocurrency markets where you buy the dips, I think is a much better strategy in my opinion, especially in volatile markets, because like yesterday I could have picked up Bitcoin at 29,000, already be up 10%, and every couple weeks you're doing this as the price of cryptocurrencies go up in general as well. So I'm quickly going to show you an example. If I was investing using this spreadsheet here, of course make your own spreadsheet to what works out best for you to stay most organized and know how much profit you're making. So let's use my example before. If I'm making 5,000 per month and I want to put 20% and I'm getting paid bi-weekly, and let's say we're starting today, so the purchase day would be January 22nd 2021. Amount spent would be 500 since I'm doing 20% of my $5,000 a month investment. So obviously you want to do good research before you start buying and find the altcoins you believe in long term that you want to buy and continue buying, and that you're not going to worry about falling apart or crashing at any point as well. So for me, long-term holds would be stuff like Ethereum, Cardano, ADA. I'm starting to buy DOT, and there's some other coins as well. A small cap cryptocurrency I've been doing dollar cost averaging on is SparkPoint SRK. So I put all the cryptocurrencies here that I believe in long term that I'm going to be buying, and then I put the price I bought each of these at. And I would spread this out differently as well. I wouldn't just put the same amount into each of these coins every time. I'd actually see which one had the biggest dip and had the biggest things coming up as well, and I'd invest accordingly to that, to where I can make the highest amount of profit. Of course, you can just do it that way as well, where you just put 50 in, or 100 into each altcoins and have 5 altcoins at $500 each paycheck. So basically you want to have your own strategy of how you plan to do dollar cost averaging. Have your own version of it is going to work out best for you. And then I'll put the total value here each paycheck. And then every time I came back here every 2 weeks, since it's bi-weekly, I would put the date I bought the cryptocurrencies, amount spent, and then so on, and then add up the total values here, and eventually you have an idea. So in addition to this, you could do a spreadsheet for each one of these altcoins, how we saw the example here. So basically you would use this chart for each altcoin you bought and basically fill it out the same way. You'd put the price of the altcoin and put what altcoin you're buying, how much you're putting each paycheck, how many coins you got for that amount of money you put, and then total amount of shares owned altogether after doing this, and total value. This will give you a better idea for each altcoin how good you're doing and what your average buy-in rate is and how much total profit you have as well. So you can do a couple different things here. I do recommend coming up with your own method of dollar cost averaging, but I think my strategy works out well, which it has for me so far, where I just spread out my purchases with each check. I don't go all in super heavy on one altcoin just because there's a lot of FOMO behind it and hype. I do this very rarely, and it can work out if you catch news right before, right as it breaks, and you buy before everyone else. There could be a huge pump right then, just like we saw with Basic Attention Token today. I did mention this in my video earlier today. So this guy added to the Grayscale fund, and basically it went up 40% just from that news. So if you caught that as soon as the news broke, you could have purchased this before everyone else bought, obviously. So buying now as it's up 40% is not a great idea. So as you guys can imagine, you could combine a lot of different strategies here, doing dollar cost averaging, buying the dips regularly. You can be buying cryptocurrencies as news breaks, which is why I'm creating a cryptocurrency membership group to give you guys alert and signals on major stuff as soon as it happens is very important in my opinion. And there's going to be a lot of other perks to this as well. This will be launching in the upcoming month, and I will be doing a pre-sale very soon for this as well. So if you're interested, just stay tuned and I will give you guys more info. So that's it for this cryptocurrency guide video on dollar cost averaging. Definitely share this with friends and family. It does help out the channel as well, especially these type of videos that are guides. They really don't get as many views. So if you guys do want to see more guides like this, I do appreciate if you share it on social media and send it to friends and family that may find it useful as well. And don't forget to subscribe and hit the bell to be notified when I make new videos. I'm doing 2 crypto videos per day right now, some very time sensitive information sometimes as well. You can also go to my homepage on my channel here, and I do have a few different cryptocurrency playlists here. If you guys missed any news, I have the most recent crypto news videos here, and then I have basically my most popular video uploads. Cryptocurrency guides here, as you guys can see, lots of detailed guides and very valuable knowledge here, all for free. And then if you guys want to learn more about Cardano or join my crypto trading series, which I do a live trades once every couple weeks on Binance US. So again, thank you guys so much for watching. I hope you guys found it useful, and I'll see you guys in the next video.